up 1% with markets focused on trade talks. April 24th, Scotiabank. Euro-US dollar rallies above 1.1500 as US dollar bleeds on threat to Fed's independence.
Found a mid-performer as markets await Bank of England government speech, Scotiabank.
Euro outperforming on relative risk and central bank policy, Scotiabank.
Canadian dollar firmer but underperforms G10 peers, Scotiabank. US dollar slides on Fed independence threat, Scotiabank. Yeah! Euro US dollar price forecast, bulls pause but retain control.
Euro-US dollar breaks higher and traded to highest level, going back November 2021.
U.S. stocks may see initial weakness on lingering trade worries.
Gold breaks above $3,400 as Trump-Powell feud challenges U.S. dollar's safe haven status.
All right, good morning. All right, let me turn the squawk off. Let me turn the music off. All right, how'd we do it? Welcome to Forex.Today, the YouTube community of more than 21,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance because trading is risky. Not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. India. Kumar, where in India are you? Been around India. Been around. All right. So today we'll do some technical and fundamental analysis. Some of the markets are closed today. So you got to be careful, consider it an additional level of risk over normal risk. More risk is bad. So anyway, so we will go through the charts. Let me know if you have anything in particular you want to look at. Gold, oil, or Bitcoin, for example. Guess we could just start with the Dow. Yeah, so you have to decide, do you want to be a bull or a bear? You need to decide before you log in. Therefore, you know, if you want to buy a dip or sell a rip, you may recall this trade that I did, I don't know, 10 days ago. I was able to catch it there. And then somewhere in, so it went up, it went down, and went up. And then when we got to this area, I moved my stop to something like it in here. So I'm no longer long. So what would I like to do? Well, I'd like this to go long. Thing is, technically, it is not bullish, is it? Nope. And that's that. Enough said. Huh? NUF, SED. Enough said. All right. All right. So you want to look at smaller time frames. What you see here is one level that we can consider support-ish. So over the next couple of days, maybe we look for a bounce at somewhere around there. The lower one, okay, I'm looking for a double bottom. Now, this is just straight up bearish or straight down bearish. So you can be a bear. The only thing is we're out of position on a daily candle. You want to be up near that 5 EMA. Okay. And since I'm a bull, what I did is when we got to the daily moving averages, I bailed on my, well, I didn't bail on my long, I jammed my stop. Yeah. Treasuries, let's take a look here. Did I say treasury? Sorry, tech. Let's go all the way out and zippity-doo-dah. Same. There we go. Same. Back to the moving average and then collapse. Yep. So, I didn't re-long tech. I went long S&P. I went long Dow. I think I had one Dow and two S&Ps. I'd like to see a double bottom here. But once again, this is very, very bearish. Very bearish. When you look at this chart, there's nothing bullish about it. Nothing. Not even a little bit. So now we kicked off the 21 with a 5A cross down. Yeah. Does anybody know what Kumar's talking about? Jiblesh? What's you up to, dude? Yeah, no idea. And then let's take a look here. Oh my, oh my. So let's go all the way back out to the daily. Yep. Could be Sky Killer. Kick off the 21, 5-8 down. So they're all the variations of the same. I'd like this to be bullish, but it ain't bullish. That's all I know. So what I want to do is line up the technicals with what I want. So if I want to be a bull, okay, I look at this and say, well, this ain't bullish. Not even close. So wouldn't it be cool if we got a double bottom here and then up? Yeah, maybe. So I got to wait my turn. Now you might say, well, Wayne, why don't you just short while you wait? Well, I could, but I don't have to. So yeah, you can be short-term short, but long-term long. Yeah. Okay. Yeah. I don't have to. I think I can wait. I hit my goal this month already, so I don't have to overtrade. Well, M1 is not a buying pivot, Sky Killer. So, okay, that's a counter trend. And what time frame are you talking? Yeah, yes, you could. So, what time frame are you talking about? Daily pivots. Oh, annual pivots. Oh, wow. Let's no. No, I mean, I wouldn't ask for that. Okay? But if we head down there, it's a big, giant, fat maybe. But I have it somewhere in between, right? So 4,500 to 4,100. Yeah, so it's more like maybe later. Here's what I would prefer, okay? Is that we do this and then maybe at the end of the year, or not at the end of the year, but by the third quarter, we're doing that. So I'd like 3 months of up, 3 months of down, 3 months of up. Which reminds me, I have to do an annual outlook, huh? Okay. All right. So, whatever. I'm the king of wishful thinking. All right. Yeah. So we're bullish. We've been bullish on this very long time. What do you think now? Gorgeous, right? Gorgeous. 3754. So 3750 is the next real target. You're like, well, what about 35? No, no, 37 and a half. Now the velocity is pretty big. It could come down and then go up, but that's that. Okay. Interesting, huh? So the healthiest way of doing this would be a variation of something like that. Okay. How are we doing on this one? What do you think? Did I get this one right? Huh? Did I get this one right? Could be a rabbit, could be. Yeah. Not too bad. Nice little role reversal, huh? Just nice. So we'll let that come together. Okay. Oil. Probably want to start connecting some of these things. If you're a bull, you're kind of there in your zone. I don't know if you're a bull or not, but there's your double bottom if you're a bull. Okay, if you're a bull. Okay, going back out further. Okay. Probably the higher level is what you want to sell. So it could do one of these, right? The difference is the time frame. Right? The price action would be on the smaller time frame, so like daily and weekly. Thing is, this is our little role reversal, right? So we got to deal with this little, so it could go up and then down. It's not bullish, right? No, it's not bullish. So up to down. Let's take a look at dollar pairs. Bottom of our range. Remember, we were stuck way at 150, so it's dropped 1,000 pips since 150, but it's actually dropped 2,000 pips from the top, which was 160. So 2,000 pips for the year, basically. We're pretty close to that. Yeah, in time, right, Sky Killer? I mean, we're at support, and support is support. Well, you would have to assume that support's going to hold. That's otherwise it's not support, right? So then you'd use your tools. So what could you do? You could sell a pullback to the moving average, or you could sell a pullback to the top of this range. Which one will work? Well, we don't know, do we? No. But is it within reason? Okay. Because we just want to be reasonable. Is it reasonable to do one of these? Yeah, that's within reason. There may be some other scenarios, but that would be one reasonable scenario. Doesn't mean it'll do that. That is a reasonable thought process. Here's our euro dollar. Now how are we doing? Well, we're actually near the take profit zone. So I've done this all weeks ago. And our target is 116 and we're at 115, but we were 116 and a half. So we've gotten within 50 pips of our long-term target here. Okay. And look at the complexity here of the trading. Pretty basic, huh? Look at this. Up to R3. Okay. Up to R3. Oh. Now look, my analysis isn't perfect. See, I have it coming down here, and it only fell there. Okay, but in general, you see, it's a fairly basic, setup. So the actual target here is right. No, Al, because they're not using leverage. Okay, we'll look at the pig. The pig had some weakness on it earlier, but notice where we are. Wah, 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 wah. Okay, definitely some warning signs, huh? Is that going to be a problem? Yeah, could be. Could be. If you see it as resistance, it is resistance. So you have to adjust. So earlier this morning, I reviewed the commitment of traders report. Thought it was pretty interesting. So I hope you have reviewed it as well. Thought it was quite informative. So I can buy a dip, or I can catch a double top of a double top, or I can just do the double top. So how would you short this if you wanted to short? I would be on a time frame like this, and you could, if that's what you intended to do. Now, usually the way I handle something like this is I like to have a double top of the double top, but I don't have to be so picky. Okay. So we know, as I just showed you, this is a double top. Now, do you have to trade pound dollar down? No, because dollar is weak as well. So you might be better off on pound yen. Because if pound dollar falls, pound yen or pound Swissy is going to fall more. Once again, I've covered this earlier today at traders.com. Not just technically like I did here, but fundamentally. So I'm not even talking about tech. But we can. Let's talk about tech, baby. Let's talk about you and me. Let's talk about all the good trades and the bad trades that may be. Okay. And so if pound dollar came down, then one might suspect this comes down more. Okay. All I'm showing you here is that we're at a bottom of a range. It doesn't have to get to the top of the range. How do you trade a range? Well, we have a system called trap and break. So currently, or at least 3 weeks ago, these were the most likely scenarios. Right now, not down is the new up, but not down doesn't make it up. And you're like, what are you talking about? Well, you had to be in this morning's meeting. So you could, for example, have this in bearish mode based on maybe the commitment of traders report. So how do you read this chart then? You're not going to trade it as the trend being sideways, are you? No. You're going to trade it as if the trend is down. Down, 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 up, up, sell, down, 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 up, up, sell, down, 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 up, up, sell, down, 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 down. What do you think? Smell like a plant? Sorry, long day already. Okay, now this is an old trade plan that's still valid. What does this say? That we want to sell somewhere in here. And so what we're looking for is down, up, and down. Now, I did this many days ago, maybe even a week ago. It's still valid, y'all. Question is, how do you feel about this? Okay. Are you going to do a trap and break here? What do you think? Are you ready, willing, and able? Do you have this all planned out? Okay. What do you guys think? How about our kitty cat? Okay. Do you remember the target? Our current target is 100. We've had this target since the beginning of the year. When we were at 110, our target was 100. 1,000 pips, and we're 800 pips into it. You see? Is it perfect? It's not perfect. Come on, dude. But look, top, which is a double top, lower low, lower high, lower low. I have it lower high, but it went a little higher. And that predicts a new lower low. And right now I have it at 100. It's actually could go a little bit lower, but I'm just trying to keep it simple. Only 1,000 pips. We'll just round it to 1,000. It's more like 1,100. The thing is, this is slow and methodical. Slow and methodical. Is anybody here starting to appreciate slow and methodical weekly candles? No, I do not, Angel. Yeah. Slow and methodical. Yeah. Well, it's difficult to wait through a pullback that lasts a month. Oh, right on, Sky Killer. Okay. So from here to here is a month. And if you guys are on your 15-minute chart all the time, you miss the fact that it's short term. A month doesn't seem like short term, does it? No, I understand. Totally not. Okay. Cool, huh? The thing is, this could drop 1,000 pips more. If we break 100, the next one is pretty gosh darn close to 90. Somewhere in here, which I've already marked out. This is all old analysis. They're at investorbootcamp.com. Louis? Okay. There's a lot going on here, obviously. But it might just be one and the same. You know, people freaking out near the psych level. Aussie yen should be coming down, which I already showed, right? Yeah, I already did that one. Did we do euro? No, I don't think we did. Okay, euro I have going up to 167. We're at 162. We've been long since 158. So up 400 pips with 4 or 500 pips more to go. It's a bit slow. Yen is strong, but euro is strong. So we know that there's seasonality is okay this time of year, and technically this chart is up. But seasonality suggests the better time of year is more like September. So we have May might be able to get us there. So let me try to show you that. The bullish trade plan for next month, okay? Best case scenario, where we are now, so 161.5 is basically what we just tested. And if that is the case, then 167.5 is the target, which is the same as this. So we had the one, okay, 3-wave correction, and now we're doing like that in May. What do you stink? Smell like a plan? Now I'm reading a lot into it. Yeah, a lot. No, I didn't say that, Kenna. You're reading too much. Euro is strong. Yen is strong. So if yen weakens, euro will go up. Euro yen will go up. Why is euro strong? Because the dollar is weak. And euro dollar is 40% of Forex. So it's an right. This is an issue of if then. So if you're going to be a bull, how about this? What I said in the past is if I was going to be bullish on yen pairs, this would be one that I'm bullish on. Right now, we're in a scenario in which yen is strong. So which yen pairs am I selling? CAD, Aussie, Kiwi. Okay? So it's when a yen is strong, I sell CAD yen, Aussie yen, Kiwi yen. When yen is weak, I'm long euro yen. Now, it could be day by day, but it could also be seasonal. Correct. That's exactly what I'm saying. So, because I don't know what your opinion is. So, if you want to be long this is how I'm eyeballing it. Okay, I'm not telling you what to do. I'm teaching you how I get to my conclusions for what I want to do. Would I like to be long euro yen? Yeah, that means the world is functioning and everybody's happy and rich. That's a very good sign. That means the stock market is probably going up. Perfect. Is that going to happen today? I don't know. But if the stock market's down today, I'll probably be selling Aussie yen. If the stock market is up today, I'm probably buying euro yen. Okay. I know. Okay. So what did I just say? If the stock market's coming down today, I would look to be bearish on an asset like this. Okay. So I would look for like, right, like a head and shoulders type thing. Okay. Girl, you know it's true. Ooh, ooh, ooh. All right. Okay, you see, that's how you need to approach things because you don't know if the stock market's going to be up or down today. So you got to have contingency plans, if then statements, hot to go, HOTTOGO. So if we have a risk off day, and I asked you guys if you're risk off, then you're going to be ready to sell Kiwi yen down or Aussie yen down or CAD yen down. Okay? So 57% of you are risk off. So you would be looking to sell this. And you would then look at this like a head and shoulders, which is another form of trap and break, really. And you probably don't need to be on a 4 hour because you've already analyzed this. So now on a 15-minute chart, you're waiting for bearish opportunities. Okay? By the way, thank you for all that love. Somebody's sharing lots of love today. Look at all the hearts. You're making me blush. Okay? So remember, I have never felt like it's my job to put you into a trade. Ever. The value is me sharing technically and fundamentally my decision making process and then be a role model as far as the psychology of being a trader, good, bad, and ugly. And I'm sharing the psychology here as well as the technicals and the fundamentals, right? So you should already know if you're a bull or a bear on pairs. And then you're looking to see if it's a market open that's favorable to you. So, for example, let's say I'm a bear. Stock market's opening, so I know it's the best time of day to be trading. And I want to sell this today. Can I trade a double top? Yeah, but you know it'd be better? Okay. A double top, lower low, lower high, lower low, lower high, lower low. The thing is, you're eyeballing this from one point of view. You're not trying to figure it out. You're not trying to figure out what to do. You already know it. You're trying to analyze whether the opportunity is presenting itself. Are you a bear or are you not a bear? Okay. That's today's bearish sell zone. You see this? This is all pre-planned. So would a bear at a market open be interested in selling a double top on the daily M3? Dude, well, I don't think there is another way to trade. Like, I don't know what else would be going on. Okay. Now, is anyone here a bull? You could be a bull. I'll tell you what. Bulls are going to buy in here somewhere. That I'm sure of. You know why I'm sure? Because that's where bulls would buy. That's just it. Yep, that's it. So it's already sort of preordained where bulls will buy and where bears will sell. This is why it's critical you need to know whether you're a bull or a bear. Okay? Yeah. Okay, so now you just kind of sit and wait. And by the way, this area where it actually, so remember, pivot points are like implied volatility. So based on past volatility, this area between 84.5 and 84.65, okay, that's an implied sell zone. Using technical analysis, this is our sell zone. And you can see the technicals work more than the implied. They're more accurate. But the whole point is if you're a bear, and you should know whether you're a bull or a bear on Kiwi yen. Like, oh my God. Oh my God. Like, for sure you must know that. Then you know this is your sell zone for the day. There's no ambiguity about it. This is a daily sell zone. That's the sell zone for today. What we don't know is whether it's going to fall today or rise today. But we know the time of day that it would probably rise or fall, right? The market open. And by the way, starting around 7 a.m. and then 9 a.m., which is here and here, is the probable time of day around the New York Open. And we know the probable price based on price action, aka head and shoulders. This is the right shoulder of a head and shoulders. So that's technical analysis. Here's your implied volatility sell zone. And they're very, very close, right? They're very, very similar, right? Yeah. So then you take it another step. You sell here or you sell after the break. Okay? If you don't do one of those, you're either not a day trader or intraday trader, or you're not a bear. If you are a bear and you don't do any of that, then your analysis is weak. And usually what happens in that scenario is you're looking at everything independently. Okay? So like the way that I just explained things, okay, you could be, okay, you have Swissy pairs, you have yen pairs, and you have dollar pairs. So you should be able to discern, is Swissy strong or weak? Is yen strong or weak? Is dollar strong or weak? And then you have things you want to own and things you don't want to own. Euro? Yeah, maybe. Maybe. It's not a prediction. It's when euro is strong, you'll recognize it. Pound. If pound gets strong, you'll recognize it. Aussie. If Aussie gets weak, I'll recognize it because I'm a bear. What if it's bullish? You can have it. I don't want it. What does that have to do with me? Oh, Wayne, Aussie's bullish. Well, you should buy it then. I'm not going to buy it. Why? I'm a bear. Well, Wayne, it's gone up for 2.5 days. Yeah, well, it's fallen for 2.5 years. I'm on a higher time frame. Doesn't make me righter and you wronger. We're just on different planes. That's all. Okay, Aussie, Kiwi, CAD. Okay, I don't know if they're going to go up or down, but I am bearish fundamentally. So I know what I want to do here, and I know what I want to do here. And most of the time, this stuff is, uh, risk on or risk off. But then I've also noted that as of late, the correlation amongst these have broken down a little bit. So now I kind of isolate them independently. So right now, I think this is weak and these are strong. So if that is the case, then euro dollar up, pound dollar up. If or when that occurs. Or if these are strong, Aussie yen down, Aussie Swissy down. Kiwi yen down, Kiwi Swissy down. CAD yen down, CAD Swissy down. But then I take this further, and even if Swiss franc is strong, I don't really want to buy it. It's not something that I'm actually, based on the monetary policy of the Swiss National Bank, do I want this? So I could even isolate this further and say, I only want to sell Swiss franc. But it's not bearish today, it's bullish. So now I need, in scenarios of risk on, sorry, I wrote that one backwards. I only really want to sell Swiss franc. So in periods of risk off, I think I'm going to sell Aussie yen, Kiwi yen, CAD yen. On periods of risk on, euro dollar up, pound dollar up, euro Swissy up, pound Swissy up. Oh, so now you see how I have all of this organized in my brain so that when I'm analyzing up or down, I'm not looking for 15 different reasons to figure out whether I'm going to sell Kiwi yen or not. I've analyzed the right shoulder of a Head and Shoulders. I've analyzed the best daily selling pivot. I could be selling this, or I can sell after a breakout pullback. But sell, I may. What about buying it? No. And this is how I teach, because I preach to teach, because some of you never had this. Yeah, because I want you to be able to trade this way. I want you to trade like an institutional investor. That doesn't mean you can't trade a 15-minute chart. Oh, for sure you can. Or a 5-minute, or even a 1-minute. Yes. But if you don't know what your strategy is, and I don't mean the way you trade, I mean the direction, the fundamental and technical analysis. Okay? Is this bullish or bearish? Bearish. Oh, but Wayne, it's been going up for days. Yeah, what's your point? Okay? Because if I'm a bear, here's what my opinion is. If I'm a bear, my opinion is that is about to happen. And being right or wrong will not be the most important thing in your trading and investing career. It's knowing when to get long or short. It's knowing when to try and when you're wrong when you try. Oh, it's been going up for days. Oh, good for you. Yeah, good for you. Watch me sell it. Because I sell high when price is moving up in a fundamentally bearish market. No, there is not specifically for gold. There is one for oil. Gold might be fun to do someday. Yeah, the last year and a half I've been focused on launching traders.com. And so we'll get to that for sure. We'll get back to doing some more of those courses. Remember, they cost me a lot of money building those courses. Takes a lot of time. I I have a PhD assistant that helps me. His time isn't cheap. Yeah, my time isn't cheap. It takes a lot of time and a lot of research. Yeah. That oil trading course, I'm proud of that one. I had a lot of fun doing that. That is incredibly detailed. So, could we replicate something like that? Yeah, I enjoyed it. Yeah, thank you, JGB. But it probably takes 100 hours, maybe more. Let's take a look at the longer term stuff. This matters, huh? Yeah. Made a lower low, y'all. Yeah, this dollar weakness is important. Very meaningful break here. Okay. Now on Kiwi, I'm eyeballing this, of course. Look at this strength in Swiss franc. It's strong, but I'm a seller. All I know is now is not the time to sell, but I am a seller. So, like, for example, I want to buy Euro Swiss franc. The question is, do I want to buy it today? What do you think? No, probably not. I don't see, I want to buy. I'm a buyer on this, and it's falling. Good. You want to sell that? By all means. But I'm a bull. I'm not stubborn on making it go up. I'm just stubborn because I know precisely why I want up, not down. So it either sets up for a trade or it doesn't. Right? So let's maybe look at this. Can I trade this as a triple bottom? Yes. Okay, cool. So I have permission to buy. Is this a good time to buy? No. Yeah, not yet. That's all. And that's it. I sit and I wait. Is this the right time? No. But I'm going to buy it. Pretty sure I'll have an opportunity. But I can tell you what, I'm not going to sell this. And that kind of knowledge and discipline keeps you out of trouble. Remember, the goal is to remove all the randomness and guessing in your trading. And trading's hard enough because you're trying to interpret charts to give you the right price and time for entry. But if you don't know if you're a buyer or a seller, I think what you're doing is almost impossible. I don't think there's any way with getting consistent results doing a different form of trading than how I teach you. So, for example, I only buy Euro Swissy. Is it possible I can produce consistent results when I only consider buying Euro Swissy? Is it possible? Even perhaps likely. Is it likely I can produce consistent results? Well, another way to answer it is change the question. What is the likelihood that if I trade Euro Swiss franc inconsistently, that I could produce positive consistent results? Because I don't think we want consistently losing results, but that would be consistent. Loss after loss after loss after loss. Well, I don't think that's your goal. So, is it likely you get positive, consistent results from inconsistent trading on this pair? No. I think it's not likely to have consistent positive results when your trading is inconsistent. So I kind of answered it as a negative. The positive way is saying the best way to get consistent results is to trade consistently. Okay, so hopefully that set that up properly so that I can say, should I buy it now? No. But what if it did this? Can I buy the retracement? Yep. What if it did this? Yep. Okay, so on and so forth. I only buy higher lows. Now, imagine I bought a higher low 1,000 times. 1,000 trades, and every single one of them is a higher low. Is it likely I'll get a positive outcome? There's not one double bottom or triple bottom. Nope. There's not one sell. I have 1,000 trades that are buying dips in an uptrend. Am I going to have a positive outcome? Yes, Sky Killer, that was Euro Swiss franc. Yeah. So you see, this is where I want you to go. I'll say it another way. Imagine you're a professional investor that invests into Forex traders. Okay? So you analyze over 1,000 Forex traders. I have. Now, the vast majority of these Forex traders, they're very short-term traders. Okay? They have a terrible Sharpe ratio. They can make 80 trades in a row profitable and then have a 20% drawdown on one trade. But whatever. And there's different variations. So every one of those 999 traders are different variations of scalpers and day traders and intraday traders. That'd be the vast majority. But now I want this, and okay, you're an investor. Now you take a look at the 1,000th investor. This trader has very, very consistent size losses, meaning their worst trade, let's say, is a 100 pip loss. Most are either 50 pips or even 5 pips. So let's say 80% of the losses are -5 to -50, and there's nothing, not even one trade bigger than -100. But every single winner is more than 100. More than 100 pips. That's a basic day trade, by the way. If the average daily range on euro dollar is 100 pips, then that's a day trade. A swing trade usually gets you to 300 pips. So let's make this a swing trader. So you're analyzing this swing trader, and they have 1,000 trades, and all the winners are 300 pips. Not one loser greater than 100. In fact, most of the losers are -50 to -5, so on average, -30 pips. The average loss is -30. The average winner is 300. Now, don't get caught up in the ratio and all that kind of stuff, right? Because, it'll all kind of, everything will average out. But what I'm trying to get to is the consistency. Does it show that you have control over your trading behavior and decision-making process on risk? Absolutely. Do you know how to set up trades fundamentally? Yes, you're letting the winners run. You have a lot of break-even trades. Yeah, well, a lot of trades start and then don't follow through. But what about these -50s and -100s? Yeah, you were wrong on those. But you know how to take a loss. It's not like you every once in a while you have a -300. No, 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 no. So what does it prove? You have a clear strategy. You have good risk management. You're a consistent trader. Nothing ever gets out of hand. And because you know to let your winners run and cut your losers short, you have a fantastic Sharpe ratio. But most importantly, now, and this is the biggest part, you presented or this trader presented to you, the investor, their track record. They saw 999 traders that have generally the same kind of mixed bag of trades. And then yours stood out as something unique. They look at your trading and go, holy cow, look at this. Now, if you take it even further, every Euro Swissy trade you took was long. it shows that you have a strategy. They might actually ask you, hey, we noticed, quite a few of your trades were Euro Swissy, but every single one of them is long. Why was that? And you can give them a clear intellectual, fundamentally or monetary policy related response. That this has to do with the relationship created by the Swiss National Bank monetary policy. What I mean, Richard, is when you analyze a lot of traders, and I've analyzed over 1 million trades for sure, you see things like -3, -13, -300, negative 72, -111, -400. Okay. And the results are random. What if it was like -3, -3, -3, -3, okay, -33, -3, -3, -3, -99, -3, -3, -3, -33, -99. Okay? And this just goes on and on and on and on and on and on. So, why so many -3s? These are trades that set up and then failed. But so you were long, your plan was this. And you got long and you were profitable. And then it started to fail, so you moved your stop to break even. But break even for you isn't zero because it wasn't your plan to break even. That's a failed trade with risk removed. You noticed the market conditions were changing. And that happens fairly often, let's say. Now, sometimes you enter a trade and it just fails. Doesn't happen often, but it happens. As soon as you entered, it collapsed. You didn't even have a chance to move your stop. Maybe it was a news event or a shock to the market. Trump said something. Okay? It happens. It's no big deal. And it's a day trade. So you were going to do a 33.99 OCO. And it failed. It didn't work out. It was miserable. Maybe you made a mistake or maybe the market collapsed. Whatever. It's a day trade gone bad. Most of your day trades gone bad give you enough time to move your stop to break even, but not all of them. And then what's a -99? Well, that's a failed swing trade. So you have a couple of failed swing trades. You have a couple of failed day trades. And most of the other trades just didn't work out. That's what I mean by risk management. It's not because I'm already assuming you're not over leveraged and all that kind of stuff. Now, the other thing that you often see analyzing other people's trades is they show that they make money. And they're like, look how profitable I am, Wayne. And you see like 0.1 lots, 0.1 lots, 0.3 lots, 0.1 lots, 1.1 lots, 0.1 lot, 0.3 lot, 0.16 lot, 0.33 lot, 0.1 lot, okay, 2.8 lot. And all of a sudden you're like, dude, how did you make so much money? Or how did you make any money at all? You got lucky on this one and you got lucky on this one. And so 2 out of the 10 trades produced 90% of your profits. Well, that's random too. So you don't want that. You don't want that because what you're What you want to be able to do is calculate your likelihood of making money. Well, let's say at the end of the year, if you're sitting on a bunch of these bigger losses, you don't know at the end of the year if you're going to have money or not. I mean, think about it. As an investor, you want to be able to like count on this. You want low probability, low risk of ruin, right? You want a higher probability of some sort of consistent, predictable return. Okay. So this randomness, when done correctly, will show profitability, but you just won't be able to replicate it or count on it. They gamble to get the numbers, and then they probably want you to follow their account because they're so profitable. It's a terrible way of analyzing. Then you have what most people do, and they're all over the place with their losses. Some are big, some are small. They're just all over the place. Versus you need to stand out in a crowd, right? Imagine you're trying to raise money from, I'm not saying institutional investors. You need to go through a lot to get to that point, but just trying to raise money from, people that are funding currency traders. Most currency traders produce random returns, random results, and then you stand out because your track record looks like a story. Somebody looks at your track record and goes, "Oh my God, look at this. This is crazy. This person clearly has a risk management strategy. Clearly. I can't wait to talk to this person. Hey, how come you have so many negative threes? Oh, those were winners that kind of went kapooey on me down the road. So I counted them as a loss. Well, how come some are 33 and some are 99? Well, those are failed day trades and the other ones are failed swing trades. And then imagine something similar. All your winners are very consistent. 99, 300, 99, 99, 99, 300, 300, 99, 300, 99, 99, 300, 300, 99, 99. All of a sudden they're like, dude, all your winners are the same. All your losers are the same. And I'm like, yeah, I'm consistent. I have a strategy. I have the patience to carry it out, and I have the discipline to recognize when I'm wrong. My winners are small. Sorry, my losers are small. My winners are bigger. And right? And all of a sudden, like, you're just different. Imagine being in a room of 1,000 Forex traders all looking for money, and you're different in a good way. You'll stand out as something unique, a breath of fresh air, a guiding light through a world of darkness. Yeah. Now, that's what you need to be focused on. Okay? Not making big money. The focus should be on consistency and reliability. Well, it's a tough gig, right? Right, David? This is a tough gig. It's tough being a professional trader and investor. Yeah. The thing is, you'll get better, not you, David, like everybody gets better the longer they trade. Oh, it is, Jim. Oh, for sure, best gig in the world. But the idea is the longer you're able to trade, the better at trading you'll become, assuming that you have these positive habits of always learning, always challenging, always analyzing, you know? I remember, I forget which tournament it was, but this was years ago where Tiger Woods had just won a golf tournament. And after it was done, of course, you got to go into the locker room and clean up. And then you got to talk to the press for hours and hours and hours, and probably have to shake hands of some of the sponsors that put, you go through all of this, right? So you did all of this. And then when it was all done many hours later, he went back to the driving range to practice. But he just won the tournament. You're like, good enough. Like, right? Sticking to the process is everything. Yeah. Well, yeah. For some, they're not even sure what the process is. And that, right? But we try to teach that every day. It really doesn't come down to MACD and stochastics or what moving averages, or if you use Elliott wave, it doesn't matter. They're all fine. So really, it comes down to having a good logical reason for wanting to be a buyer or a seller, and you can articulate that clearly to somebody. I use fundamentals and monetary policy, right? And then from there, you can have a very clear and articulate technical process for analyzing the price and time. So if you think about it, let's do this, and I'll end it with this yet again sage advice, perhaps. For monetary policy reasons, between the European Central Bank and the Swiss National Bank, I only buy Euro Swissy. Done. Okay. So now, using technical analysis on this chart, I will use this chart to identify the price in which I will buy and the time to pull the trigger. And so on the bottom, we have the time. On the side, we have the price. And that's what this chart is for. Do I want to buy it now? No. Okay. But at some point, okay, I may. And the thing is, technical analysis gives you the price and the time. Okay. So, like, to do it in reverse order, if you know how pivot points work, you know this is the sell zone for that day or that week. Sorry, that week. Okay. So somebody had a price. They knew in advance that's the price they want to sell. They just don't know when it'll hit that price. But if it hits that price, then you sell it. Seems like they used a limit order so that they even took the whole when out of the equation. If it gets to that price, sell. And that's what happened. In the same fashion, going back here, the time and the price. Okay? This is a buying price. In fact, it's the best buying price. Okay? This is the target. So somebody could have added an order here, once again taking the time out, but in this case, a double bottom pre-London, or wait, these are weekly. So first of the month, okay? Okay, and then up, and then they had a limit order here. So they had a limit order here to get in, a limit order to get out. So they're saying, look, we don't know the time, and nor do we want to analyze the time. We don't want to be there. We just want to swing trade this. That's all this is. That's what I mean by swing trading. So the swing trade for that week is buy it at 95, and this is the target. 96. Okay, you can see preordained implied volatility. Cool. So, do I want to buy this? Well, I'll tell you what. It could do one of these, or it could do one of these. I know the prices and I know the time. The thing is, I only buy higher lows. So, I don't really care if it does one or the other or drops lower. Doesn't involve me. I don't care. But if it did this, guess what I'm doing next week? I've already identified the price, and then I'd have to wait for the time. Like, if it comes up and then it comes down, take the next cross up, take the next Stokes up, take the next higher high, higher low up. And that would give me the timing of when to pull the trigger. It won't give me the price. I already know the price in advance. Okay. So I can guess even now, if it made a higher high, this is probably the roll reversal. Okay. Okay. So if we find ourselves above that pink zone in the future, then 93.5 is going to be a price in which I'm going to consider buying. I just don't know if or when it'll give me the opportunity. So now I only have to analyze when. After the high, buy a low on the roll reversal. Okay? No, don't do things like rules of thumb. Only buy an M2 and only M4. No. These are just tools for you to make decisions. Okay? Okay? I want you to be the boss. All right, I got to go. That was real. Sorry I babbled too much today. It's a long session. Thank you for being a subscriber. By the way, for those that don't know, please use the Squawk. Okay? Please use the Squawk. The free Squawk. Okay, I have to pull it up for you. Hang on. YouTube.com @TRADARS. That gets you here. Australian dollar, US dollar price. Forecast refreshes 4-month high above 0.6400. NASDAQ extends decline to 2.6%, eyes on NVIDIA.
Dollar falls. Further as markets fret about growth, Fed's freedom.
Elon Musk to give guidance on when leave Doge during earnings call. Markets turbulent amidst focus on Fed tariffs.
As Trump eyes coal revival, his job cuts hobble black lung protections for miners.
U.S. a leading index for March, 0.7% versus 0.0 estimate. U.S. stocks extend the fall. U.S. President's Trump. Preemptive cuts in interest rates are being called for by many. Gold extends bull run as U.S. dollar bleeds on Trump-Powell feud. All right, so every half an hour it gives you a little update. We just happen to catch it perfectly. Most of the time it's quiet. So if you're sitting on the beach in the Caribbean, you can have your phone and a headset. And every couple of minutes, every 3-4 minutes, a headline is whispered into your ear. Yeah. Isn't that neat? So this runs 24 hours a day, 7 days a week. So this one's been running now since April 14th. So a week, I guess. So, yeah, it's becoming more and more stable. So that's pretty good. It shows nothing on the calendar till tomorrow. Every 15 minutes, you get a new technical trade pattern. And of course, it reads the news in real time. So anyways, it's nice. All right. Again, peace on earth. May the pips be with you. May your profits be above average.